Welcome back to Money Hack Japan. Today we're diving into the current state of Japan's stock market and how you can navigate it effectively in 2024. With a rainy Tokyo ambiance setting the perfect backdrop, let's focus on actionable insights you can implement right away. As we step into 2024, it's essential to analyze the recent trends that have influenced the Japanese stock market. One of the most significant factors is the ongoing global economic recovery post-COVID-19, which has affected supply chains and consumer behavior across the globe. According to the latest data from the Tokyo Stock Exchange, the Nikkei 225 has shown resilience, bouncing back from last year's lows. As of early April 2024, the index is trading around 30,000 points, reflecting a year-on-year increase of approximately 15%. This growth is primarily driven by strong corporate earnings, especially in sectors like technology and manufacturing. Now let's zoom in on sectors that are poised for growth. First, the tech sector remains a hotbed for investment. Companies like Sony and SoftBank have been at the forefront, leveraging advancements in AI and 5G technology. If you're looking to diversify your portfolio, consider ETFs that focus on technology stocks. For example, the Next Funds. Nomura Next Composites Index ETF has consistently outperformed its peers, making it an attractive choice. Next, the manufacturing sector, particularly automotive, is also worth your attention. With Japan's automotive companies rapidly adopting electric vehicle technologies, stocks like Toyota and Honda are seeing significant investment. According to recent reports, Toyota aims to produce 3.5 million electric vehicles by 2030, which could substantially increase its market share and profitability. If you're considering individual stocks, add these to your watch list. However, it's not just about finding winners, it's also about managing your risks. The Japanese yen continues to be volatile against the US dollar, which can impact earnings for export-driven companies. Keeping an eye on the currency exchange rates is crucial for your investment decisions. Utilize tools like Forex analysis apps to stay updated on foreign exchange trends. In addition, let's talk about inflation. Japan has experienced a moderate rise in inflation, currently hovering around 2.5%. This is still below the Bank of Japan's target of 2%, but it does introduce a layer of complexity for investors. Higher inflation could lead to increased interest rates, affecting stock valuations. Therefore, consider defensive stocks, companies that tend to perform well in inflationary environments, such as those in the consumer staples sector. Now, what about international factors? The geopolitical landscape is always a critical consideration. Tensions between major economies can lead to market volatility. For instance, trade relationships with the US and China are always in flux. Keeping a pulse on these developments can give you an edge. I recommend following reliable financial news outlets and subscribing to market analysis newsletters. Another strategy to consider is dollar cost averaging. By investing a fixed amount regularly, regardless of market conditions, you can mitigate the effects of volatility and reduce the risk of making poor timing decisions. This approach is particularly effective in uncertain environments like we're experiencing now. Lastly, don't forget about the importance of rebalancing your portfolio. As markets move, the allocations in your investment portfolio can drift away from your target strategy. Regularly reviewing your investments ensures that you maintain a balanced approach and are not overly exposed to one sector. In conclusion, navigating Japan's stock market in 2024 requires a keen understanding of both domestic and international factors. Focus on sectors poised for growth, manage your risks, and stay informed about the broader economic landscape. By implementing these strategies,